In this lesson, we are going to study price action reading within the context of candlestick reading. This is probably the most challenging part of the course because it involves the principle of subjective interpretation of markets. I say that it can be difficult because sometimes it's hard to come up with a black and white answer about what a candle means exactly. That happens because we cannot fully roll back the chain of causality of the decisions made within a candle period. We need to interpret the candles based on a few assumptions of what the relationship between candle body and candle tails mean. It's paramount to note that an enormous effort has been made over the years to box candlestick in a series of pre-packaged patterns, which is an attempt that has diminishing returns. For example, the same exact candle can mean different things in different contexts. Even worse, it might not even mean something useful if it is isolated and doesn't fit within a trading context. That basically means that memorizing different names for certain candlestick patterns is counterproductive. We need to approach price action reading in a more organic and flexible way. Instead of memorizing the name of a candlestick pattern attached to a pre-packaged interpretation of what it means, we are going to establish a few guidelines that will enable you to come to your own conclusions about what candles mean in whatever context they might appear. In order to do that, we need to establish 4 different angles in which we are going to analyze specific candles on the chart. The first angle is called relative volatility, which is the perceived volatility of the candle being analyzed in relation to the surrounding candles. High volatility candles are simply larger than low volatility candles. However, this idea of larger and smaller depends entirely on the frame of reference. For example, the candle X can be considered high volatility if compared to candle Y as a frame of reference. However, it can be considered to have low volatility if compared to candle Z as a frame of reference. Recognizing the relative volatility of a candle is important because that indicates moments where buyers or sellers start a significant move. This moment by itself can be used later on as a non-obvious level that will compose a trading idea. The second angle is called shape interpretation. This is where we attempt to roll back the internal history of a candle by looking at the relationship between its body and its tails. This combination of body and tails is what forms the abstract idea of candle shape. There is no better way of grasping this concept other than practicing. In this lecture we are going to see a few conceptual examples. Later in the course we will observe the real application of these ideas. The third angle of price action analysis under the light of candle interpretation is called relative position, which points to the position of the current candle in relation to the previous candle. This is where the notion of inside and outside bars comes from. An inside bar is when the entire candle being analyzed is constrained within the range of the previous candle. An outside bar or outside candle is when the range of the candle being analyzed completely engulfs the previous candle. Once again, without the temporal frame of reference, it is impossible to determine if the candle has an inside or outside relative position. The fourth angle used in candle interpretation is called bar quality, which is simply the determination of which market player dominated the bar. That's a straightforward analysis because a candle in which the close is higher than the open is dominated by buyers. A candle in which the close is lower than the open is ultimately dominated by sellers. Let's practice these 4 angles in a few conceptual examples, remembering that the complete understanding of how to interpret price action only comes from practicing it a lot. In candle 1, we can notice that it has a lower volatility than the previous candle, which shows the market slowed down at least for the candle in question. By looking at the shape of this candle, we can see that it has a large body and small tails. This can be interpreted as a sign of dominance of one type of player in this candle. It also shows an idea of certainty because there is not much evidence for the activity of the less dominant market player in this candle. However, if we look at the relative position of this candle, we can see that it is completely constrained within the range of the previous candle. This idea changes the interpretation we have so far a little bit because an inside bar doesn't agree with the idea of dominance of one market player over the other. This can lead us to believe that the sense of dominance achieved by looking at the first 2 angles of the analysis could be shallow. Under the light of the fourth angle, we can see that this candle is a bullish candle and the dominant market player were the buyers, of course. By looking at these 4 elements, we can form a bias about what this candle might mean in a trading context. Keep in mind that we are looking at only 2 candles with no other element influencing the analysis, so there is only so much information we can obtain here. Let's look at a more interesting example. Here you can see that the relative volatility of the candle in question is a lot higher than the previous candle. This shows an increased interest in the market. However, the really interesting analysis comes from the shape interpretation of this candle. Here we can see that this candle has a small body and an unusually large upper tail. One interpretation that can be achieved here is that buyers were stronger than sellers at some point inside this candle, but ultimately the sellers dragged the buyers down near the end of the candle. Another possible interpretation, which is slightly different, is that buyers were consistently stair-stepping the market up until they reach a point where they opened a door and saw angry sellers ready to bring the market down violently. These two interpretations vary slightly, and a more precise interpretation would require more information coming from other price action elements. The relative position of this candle in question is also interesting. We can see that it is an outside candle, which helps to confirm the power of the sellers involved in this candle. Last but not least, we can see that this is a bearish candle, which in this case is rather obvious, but there are situations where the candles will give you mixed signals about the market player who was dominant in the candle. For example, a mixed signal here would be a bullish quality in this candle, which would contradict a little bit the interpretation of the other three angles. In the next lecture, we will start to understand how to analyze market flows and market trends.